and I'm joined by Simon Brown as always. I trust everybody is well. Before Simon joins me, I just want to make sure that everyone can hear me. So if you can hear me, could you please lift your digital hand? It'll be the hand icon next to your name. All right, I see a few hands. Simon, good morning, fresh from a nice long break. Hello.
How's it now? We were just saying, everyone went to Durban except me, but I just went to Magaliesburg. I was being lazy, but it was really lekker to get away for a couple of days.
Yeah, I must say, I even though I didn't get to go to the well, I did. I went to the beach, but it was raining, so that doesn't really count. But it was a very nice trip, drive down to Durban, and it wasn't as full as I thought it would be. So quite interesting. But yeah, it's 1 week after we had a break last week, and during our break, Standard Online Share Trading won top stockbroker of the year. So a very big thank
Oh, of
you
course, yes, yes.
to all those who took their time to participate in that. I think, yeah, we are really, really very chuffed with that. And we've got a lot that we're sort of putting work into. So we really hope that what we're doing will continue to get better for you guys. But without further delay, Simon, shall we get
Sure.
right into it? Kicking off with the news that's had all of us sort of not really wanting to sleep because we're looking for the tweet that will give us an update. But last week, Trump tested positive for COVID. He's in hospital at the moment. Lots of conflicting reports coming out, and also a very big deal being that elections are 4 weeks away. And this obviously poses a lot of questions around what happens if, he's not well enough. What happens? There's a lot of what ifs, I think, floating around at the moment, Simon.
Yeah, so I mean, Danae, it probably would have been our top story. The fact that the U.S. election is what 4 weeks and 1 day away. Of course, Trump getting confirmed positive on COVID on Friday just adds to it. And I'm going to talk to them both in terms of. If Trump is unable to stand, of course, Pence takes over, and in absence of him, it then moves into Nancy Pelosi as head of the Congress. She would then become president. The GOP can also replace him on the ballot. I was unaware of this. They've obviously gone through the entire process of selecting him as their nominee, as did the Democrats, but they can apparently replace him on the ballot ahead of the election. Of course, some voting has already started to happen in the US, absentee votes, mail-in voting, etc. That is already happening, and a lot of that is going to happen ahead of the November 3. But what it does from a market perspective, when you saw it on Friday, early Friday morning, our time, the news breaks. So I think it was 1 o'clock in Washington, so that's about 7 o'clock in the morning, our time. The news breaks and US futures go massively negative. The US had a red day Friday, but recovered, and their futures are currently green. And certainly we saw Asia quite green this morning, Sydney and Tokyo. But in an election which was probably already going to be volatile, we were probably already going to see markets bouncing around, in part due to an election, but in part due to a pandemic, in part due to questions around valuations, particularly on tech stocks. This just, I think, adds to it. My sense is, read the election, whereas 4 years ago there was the market was of the view that Hillary Clinton would have been bad for markets, although when Trump did win, the initial response was a marked sell-off in US markets, and then they roared ahead for the next 3 years and change, except for one wobble, I think late 2018, and then of course pandemic of this year. But the markets seem to have been broadly broadly saying the election is kind of not an issue from an investor perspective. There are concerns around when it will be announced. How long is the counting going to take? If Trump loses, will he willfully leave the White House? There's a lot around this, but it just him now having COVID, and his likelihood of death is quite low. Yes, he's old. Yes, he's overweight. But we've learnt over the sort of 7 months or so, 8 months of the pandemic, the medical fraternity has become a lot better at treating COVID. We've learnt the tricks. Back in February, March, we simply, the medical community didn't know. We had never seen the disease before. We're way better at treating it. So it really is a case of, does his condition deteriorate? How long before he's back in the White House? And in the meantime, it's going to add volatility, it's going to add fear and uncertainty into the market. And it's that uncertainty that is perhaps the biggest issue. That's what's going to drive that volatility. That's what's going to drive the euphoria or the worry, and which will change on a dime. Markets, although we operate in uncertainty, and 2020 has taken us to levels of uncertainty that are, to reuse the phrase, unprecedented. Certainly, markets would like to have some certainty about the future. And the next month, I think we're going to see, and probably into mid, maybe even late November, depending how long it takes and how smooth that process of counting votes is in America. We've probably got fairly heightened levels of volatility through to mid, maybe late November.
Simon, and I suppose the other big thing really with around the what ifs and whatnots is, should Pence say be replaced on the ballot, who's his running mate? What does that look like? What does that mean for all the things you've pointed out, policy certainty, China, etc.? I mean, do we expect that continuity? And I think that those are the things that are really contributing to market jitters at the moment. But also the fact that if Trump doesn't necessarily pass away, but is not fit, for office, do we have a temporary leadership exchange? I think there's also, around SCOTUS, a lot of questions around that. So it's really, apart from the timeline in terms of how far from elections we are, it's really just a very big key decision-making points for the leadership. And to not have a president around at this point in time just adds an extra layer to the levels of uncertainty that you've spoken to. And I suppose what post-election US policy looks like.
I think you make a great point there, Danae. Pence is, as is usually the case with the vice president. The vice president toes the line of the president. That is their job. No disrespect to the many vice presidents over the many, 300 years, 200 plus years of America voting. The vice president toes the president's line. But in the case, and the most recent time when a vice president stepped into the breach was Gerald Ford back in the 70s when Nixon resigned. So it's a very, very long time since we have found ourselves in this situation, and we simply don't know what policy issues Pence would bring to the table. We don't know what his concerns are. We know what Trump thinks. We can agree or disagree with it, but we know where he stands on many of the issues. Pence is a complete and absolute unknown, and that, of course, if Trump gets replaced on the ticket with somebody else, equally so an unknown. So absolutely heightens certainty. I do think that probably the only certainty that we do have is that pretty much regardless, the election will happen on the 3rd of November. It's the one thing that the US has done. Come, world wars, civil wars, Vietnam wars, and so on and so on, the US votes on that first Tuesday of every November, or of November every 4 years. So it will happen, but it's that uncertainty. And also, again, as you mentioned, if Trump is just incapacitated, if we think back to Boris Johnson, who spent some time in ICU, on ventilators, etc., and the UK, sort of the cabinet in the UK sort of carried on running the show. Now they don't have a direct 2IC, so to speak, although he had put someone in charge of his cabinet to run the meetings and everything. It does bring that, if Trump's unable, I suppose Pence takes over, but we don't know much about him. We don't know where he stands. So probably the only certainty is that there will be an election on the 3rd of November. There will be a winner announced at some point. But other than that, everything seems to be in the air at this point.
Yeah, very interesting times indeed. Now staying with the US, but looking at the unemployment figures, which are looking much better at 7.9%. However, that said, I can't help but think that some of that might be very similar, and we'll touch on this later, to the SA unemployment figures, where the size of people officially looking for work is possibly a lot lower, and that's perhaps also responsible for these good-looking-ish figures.
Absolutely. So I mean, there's and we've mentioned a couple of times, and as way back as the May numbers when they came out, there are a lot of I suppose what we would call gremlins in the numbers. Although as is the case with our local numbers and with the US, is that the formula that is being used remains the same formula. It's just that in past, sort of pre the pandemic, there was sort of, you just looked at the headline number and you were comfortable with it. But there's the number of what you're referring to. There's discouraged workers. If you're not looking for work, you're not considered to be unemployed. The other issue that's come up has been workers who are in the sense they're on temporary leave, and that would usually be maternity leave or perhaps holiday or study leave or something, not being counted as unemployed. In this case, a lot of people who have been furloughed, who are technically still employed but not earning an income, or people we're still being counted in. But what we do have, that number which goes from 14.7 to 7.9, the data set is the same within it. So we can poke holes in it, and we could view it at different ways, but the angle of the chart would still exist. Just that instead of 7.9, we would be maybe 8.9, and we might have peaked at 15.5 or 16. What's also important in these numbers is a whole bunch in terms of the US census, which is still ongoing. That has now been extended, supposed to end this weekend past. It's been pushed through to the end of October, 31st of October. So that's a fair chunk of temporary. Now, truthfully, we're talking, maybe 100,000 or so, out of a giant employment workforce. I suppose the key point, and I didn't expect it to recover this quickly. And we were looking consistently at those new unemployment claims coming out every week, and they were staying above the 1 million level. They've improved. We've seen the ADP numbers, which is the HR company who looks at payroll activity. We've seen them improving. And 7.9, I mean, I think anyone, if you had said, look, there's a pandemic, we're going to go into hard lockdown globally, and 6 months later we'll have a 7.9 unemployment rate, I think anyone would have taken it. There's still a long way to go. We'll talk in a moment about some of the layoffs that are still coming. This pandemic is not over by a long way. We're seeing new hotspots all over the world. I mean, France is having a second wave that is running at about twice what the first wave was. And I stress twice in terms of positive cases, not in terms of the death rate. We've certainly seen the death rate come down. As I spoke a moment ago, the medical fraternity has gotten better at managing and making it, managing the disease, curing people, just making it a much sort of lower mortality rate. but we've seen those second waves, and how are economies going to respond? We've seen the UK bring back levels of restrictions, although speaking to people in the UK, they seem fairly sanguine about it, and really think, oh, I just can't go to the pub late at night. But it's coming back, and that has implication. And there's parts of the economy which still remain fairly much in lockdown. I remember back in April when the cruise lines were all planning to get their first cruises going again in August. And August has come and gone. September has come and gone. The Carnival Costa, which sails out of Italy, did apparently sail, but with very, very low occupancy levels. So there are still large swaths. So there's a lot around the number. The trend is in the right direction. It does show a robust economy, but there's still a significant portion of Americans who do remain unemployed. And if I zoom this chart out, and let's go, if we look back to previous collapses, which was post the .com, and then most recently, of course, the 08, 09, that return to normalcy, or that easing off of the unemployment, has typically taken a lot longer, closer to 5 or 6 years, as opposed to in this environment here. It's we're half a year in, and the numbers looking a lot better. So likely unemployment has recovered. Again, we make the point, when do we get back to that sub 4%? And I think you can see the improvements here. It's going to get harder and harder and harder, and the improvements will get smaller and smaller as it starts to try and get back to those pre-pandemic levels.
Yeah, definitely. And I think, it's worth keeping, apart from the percentages, much as with South Africa, definitely worth keeping an eye on the actual numbers.
Yes.
Of unemployed persons, because I think that gives us a clearer picture of what's actually happening within the economy.
And we haven't had, if I can quickly jump in there, what we haven't had renewed, and we were talking about it towards the end of August, is the extra unemployment payments, the paycheck protection plan. Those have not been renewed. The House has passed a bill, but it's unlikely to get passed through the Senate. So if you're unemployed 3 months ago, you were at least getting that $600 a week. That is no longer happening, which obviously adds some pain.
Yeah, definitely. And staying with unemployment in the US, we've obviously heard, and you have pointed to this already, Disney laying off 28,000 employees, American Airlines also shedding jobs, as is United Airlines, 19,000 and 12,000 respectively. And I think we're probably going to see a lot more of these announcements across the globe, really. And I think especially around when we think about the Disneys and all these tourist attractions, I've been looking at, as countries open, some of the T's and C's they've sort of put in place, when we think about the recovery of tourism and travel, having people sitting in hotels for 14 days is really worth it. I mean, even some of the amendments that have been made to travel insurance around, you're liable for your stay should you catch COVID overseas and blah, blah, blah. And I really think that as we're seeing these layoffs and as everybody's talking about opening up, when you start seeing these little T's and C's and, conditions that are coming into focus, it actually just starts to make one realize that this is definitely, I think we thought it was going to be slow, but I think it's going to be much slower than we actually anticipated.
I think, Danae, you're 100% right.
Yeah.
It's one thing to say that I can travel, and certainly we've seen sort of travel within South Africa, and I imagine the same is happening in other markets around the world, definitely pick up. But cross-border travel, I mean, the biggest concern, I think, you mentioned things such as quarantines and the like, and even in South Africa as well, one of the statements from President Ramaphosa when he announced level 1, that quarantine is now for your account. No longer will the government subsidize it, or pay for it rather. And it's that, do I want to go on a holiday and perhaps a border gets closed and and I get stuck somewhere, or I get sick in a foreign country. Travel insurance is suddenly saying, whoa, hang on a second, we're adding some extra terms and conditions to our insurance policies. And there certainly are. We've seen Amazon add 100 plus thousand staff. We've seen Target do the same. Walmart picking up smaller numbers, but adding significant staff. And intuitively, that makes sense. Target, Walmart, Amazon, they're adding it onto their online part, onto their warehousing, their distribution, their delivery. But there's still large swaths of the economy that are struggling. And with Disney, this 28,000 staff is predominantly from their parks. Disney Plus, which is their streaming platform, is doing spectacularly well and well ahead of where they'd hoped to be at the end of their first year, which is coming up in November. But there's big parts of the economy which remains stuck. Airlines is an example. I know people who've flown between Joburg and Cape Town, and they comment that the planes are full, but there's a lot less planes. So the airlines have simply scaled back on their frequency, hence their capacity. We, of course, have a number of airlines in South Africa currently in business rescue, SAA, SA Express, Comair joining that list, and all of that then has taken capacity out of the market. So as much as parts of the economy are bouncing back, and the tech part has done spectacularly well, and there's large swaths of the economy which remain under significant pressure, and it's that K-shaped recovery. We back at the beginning, what was the shape going to be? And it's patently, we've got one sector of the economy which is more your online, your tech sort of focused part of the economy. In South Africa, it's our miners who've done spectacularly well, and that's the upper leg of the K. And then you've got the other leg, which continues to struggle. I was chatting with Sun International last week, and they're saying that their weekends are really, really busy, but their Monday to Friday, which is usually conference, remains absolute dead. It's seeing some interest for early next year, but that's always got the condition attached. Depends on level of lockdown, and foreign interest, which is they're more valuable assets. Table Bay Hotel, the V&A, the Palace at Sun City. Those are seeing minute occupancy levels as we don't see foreign tourists returning. So there are different moving parts here, and certainly large swaths of the economy have not yet recovered from the lockdown and the pandemic, and just the caution, just the people being cautious. It's one thing to go to Magaliesburg or Durban. It's another thing to pop on a cruise liner or fly to Europe.
Yeah, definitely. And I think it's going to be very challenging, I think, even for those would-be holiday makers to justify, taking those trips, especially if your first 2 weeks of your trip is going to be
there's that too.
indoors.
My trip's usually only 2 weeks.
Yeah, exactly. So I think, as with all things, it's going to be very interesting. Do you take your work laptop with and work for the first 2 weeks and then holiday for 2 weeks? How does it actually work? But it'll be very interesting, I think. And we're gonna, I think, as people, are gonna have to be very creative around finding solutions for some of these issues. But yeah, moving on to companies now, Simon, and Palantir, and I hope I'm saying this
Palantir,
correctly. A big data tech company, after having moved their listing date twice, has finally listed, but not much really in terms of eventfulness on the day that they listed. But I think there's been a lot of noise around the stock, and just some like grumbling among investors. Can we just delve into what this listing means, I suppose, for investors and the tech space in general, and B, what can we expect, especially given the race to sort of harness this phase of tech uptake that we currently find ourselves in.
Yeah, so the Palantir, and it's the weird thing with Palantir, well, not weird, it happens occasionally. Slack did it. I'm trying to think, there were a few others who did it. They didn't do an IPO. There was no initial public offering. They just went to what's called a direct listing. And what that means is that there's no roadshows, there's no capital being raised, and all you've essentially got is existing shareholders who held stock in Palantir. This stock's been around. Company was founded 17 years ago. A lot of people obviously hold money, staff, founders, investors, and the like own equity in the company, and then you start trading on the market. What it does mean is that there's typically a lot of selling pressure, and certainly after starting at $10.50 down to $9.20 on the close, looking a little better pre-market this morning, but has come under some pressure. So it's a different way of doing it. Certainly for the company, it's a lot cheaper. You pay maybe $25 million to the bankers to list, as opposed to an IPO where, of the capital raised, you can pay up to 10%. So it can cost you literally hundreds of millions, depending how many billions of dollars you look to raise. Palantir itself actually never been profitable. 17 years in operation, never been profitable. Peter Thiel is probably the best known. He was an early Facebook founder as well. He's involved in this. And essentially it's big data, but it's really divided the investment community, because their big data is, a lot of it is facial recognition, which in these early stages of facial recognition has a lot of false positives, particularly if you're doing facial recognition on anyone who isn't white. They're really good at white. They're not so good at anyone who's darker skinned, colored, Indian, black, whatever the case may be. And of course, they do most of their work for governments. Now, they don't tell us who those governments are, and there are concerns. There's concerns around their ESG ranking. There's concerns. Some fund managers are simply saying, we just don't know who your customers are, and that is potentially a risk if it turns out that one of your customers is maybe a rogue state or whatever the case may be. Sorry?
And spying.
Yeah, absolutely. And there's and are these concerns legitimate? Truthfully, we don't know, because as I said, they keep their customer list quiet. They haven't been profitable, and that coupled with the fact that it was a direct listing, and there's a lot of people involved who have shares and want to cash in some of their shares. The listing has not been spectacular. It hasn't been the giant pop that we've seen from a number of other listings, because we've actually had a surprisingly fair number this year, and we'll touch in a moment on the next one coming up, which is probably going to be the big one for 2020. So Palantir's up, it's trading. It'll be on WebTrader for folks who are interested in it, but dig around, make sure you understand the business, and that all businesses have risks. I'm not saying Palantir is different in that sense. Just make sure you're comfortable with those risks, I suppose, is the key point. And 15 billion market cap, it's chunky. It's not bad. It's in our market it would be a number 3 stock, but 15 billion in the US puts it firmly into sort of mid cap space.
Yeah, and Simon, just to touch on that lack of profitability. I mean, and I think we see a lot of this, especially among the tech stocks. And it is obviously very concerning, but I think as an investor, when you're looking at these new business models, we
actually remove from the business. And if they did, does that term them profitable? What sort of growth path have they been doing in the last 2, 3, 4 years in terms of revenue increase? And assuming that continues at the same rate, which is a big if, but let's make that assumption. At what point do they become profitable? You can look at, price to sales. What is their revenue relative to the share price, and try and get a sense. But we look at companies like Amazon, and it's like, oh, they weren't profitable for probably as long as Palantir. Sure, they absolutely weren't, but buying into a company that isn't yet profitable brings an extra level of risk. And when those profits do in time start to flow, the question is, what's the valuation? So if this company is on a 15 billion market cap, and it only does, say, 150 million of profit, well, does that make it expensive or not? I mean, we've got to sort of run those numbers, and that puts it on a 100 times price earnings. To get this to, let's say, a reasonable PE for the stock, let's call it 30, and be generous in that sense. At what point do they get to that level of earnings to even have a 30 times PE? How many years is it going to take, and what level of certainty is that it will happen? So there certainly are. Investing is always a bit of a risk, and a bit of trying to understand what the future will look like. That is significantly heightened by a company that doesn't have any profitability as yet.
Yeah, and I suppose now moving on to the next company that we're going to focus on, Airbnb, also filing their IPO and going ahead with their plans to list, and sticking on that profitability. Currently not profitable, and obviously with the pandemic, that's unlikely to pick up. 4.8 billion in revenue in 2019, but the years before have also been a bit challenging. Apparently profitable on EBITDA in 2017 and 2018, but obviously that also when you look at that, you have to really sort of look beyond the creative phrases in accounting and actually dig into the numbers to get the real story behind it. But 322 million US dollars going down the drain in the first 9 months of 2019 is also a very big drawback. And then with the obviously the pandemic also having an impact, you find yourself in a position as a company where the way forward looks a bit shaky, but they're going ahead still, anticipating a 20 billion, or valued at 20 billion US dollars. And I'm trying to find the number, but I'm pretty sure at the beginning of the year, before this whole thing started, that number looked a lot higher.
Yes.
Because I remember there was a lot of speculation about what that valuation is based on. But again, much to the question we asked before, under these conditions, what are we really basing, or what are investors or analysts really basing this valuation on?
Yeah, I think that number at the beginning of the year was closer to 40 billion, and I'm relying on memory here because I also couldn't find it. The IPO, they're talking 20, maybe 30 billion. I think 30 is a bit of a stretch. The difference with Airbnb, and it's the same questions we need to ask. You mentioned EBITDA profitability, nice, but the bigger question is, what is their going forward? How are they going to navigate not just the pandemic, which obviously is significant, and probably at least another 2 years, maybe 3 years in parts of the world where they have to navigate the pandemic, but post-pandemic, does Airbnb sit? And I think that certainly they have. I've become a huge fan of using it. I use it a fair lot. I prefer it to the competitors out there, such as Booking.com and Hotel.com and all the others. They're there, but I just find this a slicker operation. And certainly they've found that niche, and they've a lot of people who not so much necessarily rented out a room in their apartment or anything, but actually bought properties to then list on Airbnb. And of course, the pandemic has absolutely destroyed that, although it will to degrees come back. But we've seen that in parts of the US. We've seen it down at the Atlantic seaboard and in the Western Cape, where people would have 6, 8, 10 properties they'd bought just to put on Airbnb, and then revenue absolutely disappeared. But I think as a concept, we're going to continue to be traveling. That travel might be local rather than global, which means your pricing needs to be more sensitive to local tourists, rather, in the South African example, than foreign tourists who come with dollars or euros or whatever the case may be. But also the services that they can bring onto it. They've started bringing in sort of like, experiences. You're in Durban, you're in Cape Town. These are the sort of things you can do. And I can see a lot more scope for that in terms of almost not becoming a Yelp, which is a recommendation sort of engine and a review engine for restaurants and the like. But if you're staying at this place, here are your three local restaurants, and they've probably paid a couple of rand to be on there, and they get mentioned because I'm in a town or a place I don't know about and the like. So I think they can turn on some more revenue streams. I think that we are generally, as a society, we've been getting richer, we've been traveling more. Pandemic pokes a lot of holes in that, but that trend is weakened, but certainly continuing. And I think the last point, which might be significant, and maybe I'm overplaying it all, but the one thing this pandemic has taught us is that we can do a lot of things from our lounge. Currently, me and you are, in the olden days, we would both be sitting in an office in Rosebank at Standard Bank right now doing this. I don't know where you are. I haven't been to Rosebank since March, and don't know when I will be going back and the like. And then suddenly it's a case of, well, hang on a second. Couldn't I go down to Stilbaai during whale season and spend a month in Stilbaai and still do my job, but also be watching whales whilst doing it and then use Airbnb? Does that add some wind at their back? It's not going to fundamentally change the business model, but it does start to add some wind. It's an IPO that I will dig around. When we finally see the documents, they're not out yet. When we see the pricing, it's certainly one I will have a closer look at. And we'll revisit it as we get closer to that IPO and we get a sense of price and a better sense of numbers.
Yeah, definitely. And I think, Simon, to the point of we're working from home or we're working from wherever, one of the things certainly I quite enjoyed being in KZN last week was that I could take my laptop with and actually do some work down there. And I know that we have a few team members who have been down there for the past 7-8 months. So I think this is a really interesting time, where we will be able to sort of know that we can work from holidays, and there's a lot more flexibility, I suppose, for us. And I wonder how much that will contribute to us booking those holidays and sort of taking advantage of the fact that we can do whatever we want from wherever we are. But now let's turn our attention to our local market, and looking first at the unemployment numbers. So everyone was very excited when they saw, I think, that initial breaking news report, unemployment rate falling from 30% to 23%, and it was wow, everyone was very shocked. But and we've touched on this, that really big thing, that big drop is all about how we actually, the official definition of unemployed. And obviously during lockdown, people couldn't look for jobs. It wasn't even that they were discouraged. It was illegal, to look for jobs. It was illegal to be open for business. So those people were not counted as unemployed. The sample size, I think, was it was a lot smaller. And I did see a lot of think pieces sort of coming from the economists who are generally always around the commentary when it comes to these things, talking about the fact that Stats SA is also struggling in terms of funding, and that also contributes to how much information how much reliable information they can actually gather around employment figures.
Yeah, and we've seen this. We saw it with inflation data for April and May. We saw it with the GDP data, and this has been a global concern. It's not easy in a pandemic to get that sort of data. As you say, Stats SA also has some budgetary constraints that's making it harder too. We've always just used that sort of headline unemployment number, which in this case was 23%. But as you state, a bunch of people simply couldn't look. And if you look at the expanded definition, it goes out to to sort of a little over 42%, which of course has got a, what we're trying to do is get an apples with apples. And I really struggled because the expanded data then includes, we need to then look at previous expanded definition numbers, which were floating in the last set were around the 35%. At the end of the day, 42%, look, 23% is a horror number. The 40 odd percent is an absolutely terrifying number. I had truthfully expected worse. I really thought we could get perhaps closer to 50. And the key point, as we've seen with American data, is how quickly do those jobs start to come back? I know some people who were laid off during the pandemic. Some in the restaurant industry, they've got their work back. Some who haven't got work back because the fields that they operate in simply aren't yet back and at full capacity or demand rather than capacity. And it's going to be the blowout for that number, and it's the same with the GDP in of itself. Is not the surprise or the concern. It's how quickly can we get that number back. I think perhaps the biggest lesson from the unemployment number last week was the fact that now most South Africans understand that there's actually different types of unemployment, and that the headline number excludes people who are not looking for work. It also excludes students, it excludes sick people, it excludes people under the age of 18. There's a bunch of exclusions from it, but suddenly we have a better sense of what unemployment numbers actually are and how they actually work. And I think many of us armchair economists are smarter as a result. And that really is looking for a glimmer of good news in what was otherwise a horror number. But at least when unemployment data comes in the future, we'll know to interrogate it a bit more.
Yeah, definitely. It's going to be very interesting to see how that number stabilizes. Sticking with the big economic numbers, CPI in August at 3.1%. I think also another one of those numbers that we're having to constantly keep an eye on and monitor and see what indications or what story it's telling us about where we are as a country and economic recovery.
Yeah, and I threw this into the lineup for today. A couple of points. 3.1. Remember, the range is 3 to 6. Although our governor really does talk about 4.5. He's putting those inflation expectations in the middle of the range. Yeah. And there's a few things. Reserve Bank didn't drop rates at their last MPC meeting. Many thought they would, and in fact, they indicated that the next cycle would be up, although that would be late next year. And truthfully, they, that dynamic can change very, very quickly. The point with our inflation is just that lack of demand, and the lack of demand is as we just mentioned, unemployment. People who haven't got income are unable to go out there and spend. And yes, we did boost Social Security and the TERS platform and unemployment 250, and all of those helped, but they helped at the very, very, very low bottom ends. And we saw a lot of that coming through in the ShopRite numbers, for example, and we'll touch on Capitec in a moment. So it really is just telling us just how there isn't demand due to lack of employment, and how there isn't demand due to confidence. It takes a brave person to go out and sort of really spend up a storm, even if you have the money during a pandemic. And the idea that, if rates were lower, our prime rate is currently 7%. If we slash that to 6 or 5%, we could spur economy. I'm not sure we could do much more. I mean, I think 7% is probably kind of, our 1% for the US or 0.5% in the US. I'm not sure that we could do a lot more spurring of the economy. There's structural issues, and of course, there are pandemic issues. But it's certainly one to watch. And then the key point to it will be, as it starts to rise, which components are moving. And is it rising because of imported inflation or currency? unlikely with the rand once again on a bit of a strengthening down at 1640, or is there actually some demand coming back into the economy? That with the next set of GDP numbers are the sort of two key data points that I'm looking for out of South Africa. GDP is going to be, so it's only for in September, so we're only going to get that number probably early November.
Yeah, thanks, Simon. And you touched on this in your previous statement, but Capitec coming in with their reportings, the last of the really noteworthy, I suppose, banks that we look at, listed banks, and the last of the listed banks in the space. Very, very scary numbers. I suppose not any more scary than what we've seen, but I think highlighting certainly the impact of the virus on lower income bracket of the population. 78% fall in headline earnings, lots of money lost on transaction fees, and obviously zero loan sales, or zero loans being, or not zero, but not as many loans being issued during the lockdown. And profit down 86% before tax. Headline earnings, sure, down to 650 million. I mean, these are huge numbers, Simon. And if anyone, and what the CEO pointed out was people who were earning anything like from between that 7,000 to 20,000 kind of band were really, really hit hard. And especially anyone below that 7,000 Rand band was hit super, super hard. So very shocking numbers, perhaps not particularly surprising, but really paints a stark picture of where we are as consumers. And speaking, I suppose, to what you touched on in terms of demand.
Yeah, I mean, horror numbers. Color, no one's surprised. So the Capitec slightly out of sync. The other banks are December year ends, or with FNB a June year end. Capitec's February, so they're always a little bit behind everybody else. Although for an August year end, they get their numbers out, chop. Just over 4 weeks after the year end, their results are out. And the thing with Capitec, and really, and I say this tongue in cheek, but only half tongue in cheek. They're folks who just don't like or trust Capitec and think it's just waiting to blow up. And then there's the other half who own Capitec shares, and I fall in that group, who think it's one of the best stocks ever. And if you look at their numbers, and if you look at their ability to manage, and the way they provision for bad debt, aggressively so, even outside of pandemics, when they decide that a debt is bad, they're very, very aggressive on that. They write debts down very quickly. They're able to turn off the lending taps with absolute speed and at granular levels, and all centralized from their head offices in Stellenbosch down in the Western Cape. So if we take the numbers, yes, pandemic, obviously the unemployment we were talking about a moment ago plays massively into their key market and their key demographic. And then the question is, where to for Capitec from here? They've been rolling out insurance policies, doing very well. Their cost-to-income ratio stayed at 40%. The big four banks are sort of in the mid-50s, and Capitec's at a much lower level, in large part because the way they manage their branches, because of their centralized systems and the like. I also think that and in fact they referred to it in the results, although they have a branch network, they've always tried to be more of an online sort of bank. And of course, this pandemic absolutely played into that and helped them in that regard, and absolutely boosted usage of their app, of the website, and so on. So the question then comes in, is where to next for Capitec. They've got the Mercantile, which is them looking to take on, sort of build up their small business banking accounts and the like. And it all ties into, and we saw this with the other big four banks, who were, I thought in all cases, were sort of cautiously optimistic about the 2021 financial year, and even the second half of 2020. and truthfully, surprisingly so for me. What they've done across the industries, they've raised large amounts of capital for bad debts, for provisions, for extra bad debts. They've engaged with customers in terms of repayment holidays, etc. And it's going to be a case of how quickly are they able to come out. And it's not just the bad debt scenario that's important. It's transaction volume. Their credit card customers and the like, and how many of those are back to sort of normal levels of transaction value and therefore revenue coming for that. So broadly, I think if we look at the top 5 banks, results pretty much as expected, pandemic considered. Going forward, I think the better results of the big 4 was Standard Bank and First Rand, the better as opposed to Nedbank and ABSA. Capitec, just an absolute standout operation, who've again shown their ability to weather really, really tough times. I'm not for a moment suggesting we're going to tear off back to those all-time highs at around 1,500, but our banks are well capitalized and they're not under threat of going bust or having a run. That they've come through what is the worst situation in 100 years, and they've come through it and they've managed. They've survived the process. And a quick last point: Capitec, as per the Prudential Authority request from earlier in the year, didn't pay a dividend, and that has helped the banks. In Capitec's case, that's kept about 3.5, maybe 2.5 to 3 billion rand on their balance sheet, which they would otherwise perhaps have paid as dividend, and that's across the industry. I know that Standard Bank and FNB both said, look, we could have paid a reduced dividend, but because of the Prudential Authority, we're not paying any dividend. But that does help shore up their balance sheets that are still well within capital adequacy ratios.
Yeah, Simon. And just one last thing on Capitec, and we are running out of time, but I think a very important something to focus on, especially when we're thinking about where to now, is the partnership that they have with Easy Equities.
Yes.
And, I think it'll be very valuable for investors to sort of keep an eye out on that. I don't think, certainly it probably won't be a big money maker for them, but I think it's a space that's quite interesting, and I think they've got there's a great symbiotic sort of relationship there, and a nice cross-pollination of target markets that could really be beneficial for both parties.
Yeah, agreed.
Very quickly, Simon, and I think we just need to wrap up those final 2, which would be Alviva and Ascendis Health results, especially around Ascendis Health, who had, they issued results, cancelled, and then reissued, and obviously a whole lot of big hoo-ha around that. And perhaps we could chat just quickly also about Remgro. Because I'd like us to really spend some time on the Sasol bit. So can we just quickly run through those 3, and then we can chat about Sasol a bit more.
So the Ascendis result, really it all rests on their ability to sell the Remedica business in Europe. They had a buyer early in the year that collapsed. Assuming that happens, and until when that happens, we can revisit it. This was a high-flying stock that has come back to earth. I'm getting a lot of people saying, should we be investing in it? My sense is at this point it's just too binary. Let's get another set of results. Let's get Remedica sold, and then we can start to get a sense around that. Alviva, I put onto the running order because this is the old Pinnacle. And Pinnacle was an absolute high-flying company, dearly loved by South African small-cap investors. And then back in late 2013, got into some allegations around dodgy dealings, price collapsed, sort of recovered. They rebranded in 2017 as Alviva, and of course they've been hard hit now. But they're not the old Pinnacle. They've got the old Pinnacle, which was just a box box dropper. They've bought data-centrics. They're now about 3/4 of their revenue is services driven. They've got a net asset value of around 10 Rand, a tangible net asset value of around 16 Rand. And this is one I think investors could be well served. Go do some digging, put this onto a watch list. This is, I think, a stock probably worth keeping a closer eye on. They've obviously had a tough time in the pandemic. They're getting some benefit from work from home. They've still got some supply chain issues, but they're a solid operation, and they're very different to what the Pinnacle was, which we all knew so well a decade or plus ago. Remgro results, a holding company. Here the story more than anything is it's in fact that discount is now stretching to around 45% discount to net asset value. We see the same with PSG. We see these discounts widening all over the place. And the question is, and there's a few questions, but the key point I think to an investor is, in the olden days you would buy these and expect the discount to close. And what we're seeing is a trend where the discounts aren't closing. Will they in time? Probably. But there's another reason perhaps to look into it, is that, in the case of PSG, in the case of Remgro, a lot of the assets that they hold are listed. So we get really good see-through to the net asset values. PSG updates it live on their website. And that essentially means we can buy these assets at discount. So if you want a basket of assets that includes Grindrod and some banks and some Mediclinic and everything else, that's what Remgro's got for you. And instead of paying 150 odd Rand for that basket, which is net asset value, you get to pay 95 Rand. So rather than view these discounts as the discount will close, perhaps we should view them as this is a discount to some assets that we would otherwise like to own, and we're getting them a little bit on the cheap. So a different way of looking at them rather than the traditional discount will close.
Yeah, thanks, Simon. And now just our last point, which I think, a very important one was, and very topical, Sasol selling 50% of one of the larger parts of the Lake Charles business for 2 billion Rand. And I think the reason it made such a noise. Obviously, Lake Charles, I think the entire thing has been, ongoing, and investors have been looking at it closely. But this is something that generally, cost them about almost $13 billion, which is quite a big thing, and I think when they first embarked on this Lake Charles project around 2013, 2014, if I'm not mistaken, they had forecast cost below $10 billion. And investors were generally over the years incredibly unhappy about this. And so to hear, while everyone's relieved, 2 billion Rand, selling a big stake of not the entire thing, so just one of the big parts of the project. So there's still quite a bit of the project that still needs to go. And from spending almost $13 billion to 2 billion is, a lot of investors are not happy with that.
Yeah, and what I couldn't work out, because as you say, this is not the entire Lake Charles chemical project, and I can't work out the sort of math behind it. Is it a 40% of the Lake Charles? Is it 60? Is it a quarter? What is that number? The initial response from the market was quite jaundiced, although it did rally later on Friday. The news came out on when it came. To me, the bigger issue is that they need to reduce their debt and their balance sheet by 10 billion. This knocks it to 8 billion. They've sold their oxygen operations out at Secunda. That gives them another 850, but that's ZAR. So what they did state in 21 financial year, which is the first half of next year, so sometime probably in second quarter, around Easter sort of, and the size. They've talked before of perhaps having to do a rights issue of up to $2 billion. That's at current exchange rates about 33 billion Rand. It'll be the largest capital raise ever on our market. And I think that size is perhaps still on the table. And even if they do manage to get rid of some other assets and the like, maybe they're going to do a 1 billion rights issue. But I think it's probably going to be closer to 1.5 or 2 billion. And that is massive. And I think that more than anything is probably what is spooking investors. They certainly are, moving the balance sheet in the right direction, selling assets. They're reducing costs at their center and the like. But Lake Charles, it was 18 some change billion. It was supposed to cost US, ended up costing over 13. Massive overruns, and has really hurt this company. It absolutely has hurt the company, and it's not yet over. And I think shareholders or investors, there might be that rights issue coming. So caution, I think, is still, as Sasol say in their announcement. I think caution is still worth exercising in the Sasol space.
Yeah, thanks, Simon. And I think despite the rally at the beginning of the year, definitely a stock that you want to keep an eye on. I think this Lake Charles and the resolution of the Lake Charles issue, as well as you pointed out, all the debt that they've accumulated. And I suppose, the other thing that's sort of kind of missing is, and very vague at this point in time still, is what next, and I think a
Yeah.
lot of investors are also feeling uneasy because the what next and what was supposed to be a strategy update really didn't give that many answers or concrete answers in terms of what exactly is cooking. So I think, from Sasol management, there definitely needs to be, over the coming months, just a lot more communication around what exactly is going on, what the future plans are, what the future of Sasol looks like in the next 5 years, and what they're working
Yeah.
towards.
I could just quick last point there, and I can't help thinking that if they'd spent that 13 billion on green renewables rather than hydrocarbons, at times companies need to pivot, and I think Sasol maybe missed the trick there.
Yeah, definitely. And then lastly, because we're a minute over, to wrap up on our interesting or haha news of the week, Twitter has said that they will suspend or ban or anything along those lines anyone who tweets that they wish for Trump to die.
And every woman on Twitter went, huh? Let's be clear. I've had death threats on Twitter, and I'm a man. Twitter is a cesspool, and that was a really weird place to put a line in the sand.
Yeah, and I think it was every woman, it was gay people, trans
Yeah.
people, black people. A lot of people went, oh, but wait. So very interesting times, I think, for tech companies and social media in terms of censorship, and what we can and cannot see.
Yeah, absolutely. I thought it was crazy, but hey, we live in crazy times, and I think social media is struggling, and it's more than just Twitter; it's all of them. I think social media is genuinely struggling to manage crazy times.
Yeah, definitely. But Simon, thank you very much. And we will chat. Well, I'll be back next week.
Hmm.
I think you'll be back on Wednesday. For those who haven't received your invitations, they will be going out today. But thank you very much for joining us, and look forward to chatting to you next week.
Cheers,
Thanks,
to
Simon.
everyone. Stay safe.
All right. Bye.